Spreading unconfirmed news about COVID-19 will do more damage than good. Together as one, we will kick out coronavirus. This message is from Stanbic IBTC.
Business trends beyond the headlines. We had a substantial amount of capital available to invest. Government policies, macro indices, market movement. Business Express on Smooth 98.1 with Stanbic IBTC.
Stanbic IBTC, moving forward.
Smooth 98.1, love music, love life. I'm Ayo Myra. Say time for Business Express 981, and I'm here with Rotus. Morning, Rotus.
Morning, Ayo, and good morning to all our wonderful listeners out there. Love music, love life station.
All right, talking about our wonderful listeners, we'd love for you to join the conversation this morning. So kindly use our WhatsApp platform 0809 444 0981 to send your message. On YouTube. We're streaming live. That's Smooth 981 FM Lagos, and you can tweet at us at Smooth 981 FM. Use the hashtag Business Express 981.
All right, thank you so much. So Lagos, we've got a guest. We have Stanbic IBTC in the house. We're going to be, when I say in the house, via the phone, of course. We're going to be going through, I guess, the markets as well as a few other issues out there. We have Muiwa Oni, Regional Head, Equity Research West Africa for Stanbic IBTC. Muiwa, good morning to you, sir.
Good morning, Rotus. Thank you for having me. Good morning, Ayo.
Good morning, Muiwa.
Excellent. Thanks so much for joining us. Okay, so let's quickly start with this market activity yesterday for the Nigerian and the NSE. Marginal drop, it was pretty much flat, 0.004% decline yesterday. So we're at 24,173.53 points. Market cap, well, that also declined a little bit, went down to 12.61 trillion naira from 12.611. As far as the market breadth, 9 gainers, 9 losers. NSE 30, that also decreased marginally by 0.003%. So essentially flat. GTB was the only gainer on the NSE 30, while Sterling Bank and Fidelity were the only losers. Muiwa, what's your read on the markets? Like, how do you see things playing out there?
I think if you look at market performance, so it's been relatively flat. So one would argue that maybe, I suppose some investors see opportunity. And so if you recall, there was a crazy dip in March. There was some rally by May, and seems like investors are just trying to figure out how best to look at the market. Everyone's still trying to figure out how negatively the health crisis, the COVID pandemic, is affecting performance of companies. And if you think that we haven't seen numbers that will reflect that yet, so beyond PMI and inflation readings, you haven't seen corporate earnings per se showing that figure. And once you start seeing Q2 numbers, which you'd argue that would reflect that period whereby there's a lockdown, where the full impact of the pandemic had hit the economy. So I suppose it's at that point investors might decide how best to move. I think additionally as well, you haven't necessarily seen flows into the market. So foreign portfolio flows since March. And I think that's also linked to the FX market being closed. So foreign investors haven't been able to take money out, and I suppose they haven't come in as well. So unlike other environments whereby you've seen some foreign flows come in because of global liquidity easing, you haven't seen that come into Nigeria because the market seems to be closed.
Now, does that present a worry for you? If as you've said now, with the FX issues, there's a little bit of a backlog there. Although the central bank has said that they will meet that backlog and they will, allow FPIs and so on to exit comfortably. Does that create a worry as to having more funds come in? Will possibly, foreign investors now be a little hesitant to come back in if they think that they won't be able to take their funds out?
Yeah, so it's a worry, and I suppose, because I was having a conversation with a foreign investor, and I think our own concern is that you end up creating maybe some longer term damage. So it's not necessarily that you won't see flows coming, but investors will see Nigeria as far more risky, and so will be expecting a deeper discount, want to see more value before coming in. And so you typically see investors raise Nigeria as a bit more risky. So it's almost the way you look at some companies and say, this is a very risky company, and so I will be willing to pay less. And a company that you're seeing as less risky, you pay more in terms of valuation. And so that's how foreign investors in particular would be looking at Nigeria. And so we'd always expect Nigeria to be at a discount to our peers. So a similar country with the market delivering similar level of returns, they will be only willing to pay less for such a country. So to your point, it's a bigger concern, creates more risk, and I think in the medium to longer term, because it's almost a case of you had similar situations in 2016, and before long we're back here again. So you start seeing this market as a bit more risky, as a market whereby once there are shocks, you start seeing illiquidity challenges on the FX front. And so that's how I think investors will be looking at it, sadly, going forward. And I think unfortunately as well, the institutional money has been far more cautious.
Yeah.
And you would have assumed that because of the extremely low interest rate environment, they should be looking for yield in listed companies. But I think they're also extremely cautious as well. And it's likely that they're still thinking, how best do I value these names, given that the earnings outlook as of January is definitely different now. And so how best, what kind of discount should I be placing to earnings? How should I be placing valuations?
Thank you for that. Okay, and with regards to earnings, you were saying it's going to reflect the lockdown period. Many suggest, or a few suggest, that this Q2 might be the softest period for earnings results for a number of firms. Are you in line with that? That things could be, at least this is the softest results you could see. And well, is it possible that investors have already priced it in? I don't know what kind of reaction you think you will get from investors when those numbers start coming out.
So I also agree as well that it's softest period, because we think about it, the strictest lockdown was in April, and then slight easing in May, and further easing in June. And so unlike the first quarter of the year, whereby you'd argue that you had just maybe a week or 2 weeks of the impact, a week of the impact, for April, for the second quarter, it was a full impact. And so I would also agree that would reflect that weakness. And I suppose to your point on the market and if it's priced in, so if you think about the valuation, so the market is trading currently at a P of 7.7 times, and I suppose 5-year and the medium-term average of about 11.5 times. And market is down 10% this year in Naira terms.
Yeah.
Think about 15% in dollar terms. So clearly there's been some adjustment, but I suppose it's still trying to figure out how negatively hit companies will be. So you might argue that maybe because of social distancing and because we've restricted social gatherings, maybe the borrowers might not do as well. And then with the banks, I guess it's a mixed bag in the sense that, so maybe yields on interest reduces because of the lower interest rate environment, but also banks talk about e-banking activity improving, maybe that lifts up earnings, non-interest revenues a bit. And then there are some banks that have a net positive dollar asset position. And so with such a movement in the currency results to a revaluation gains. And so ultimately with the banks, you might actually see them square and flat, just more because of how some of them are a bit more diversified, or you have a more defensive balance sheet. And so I suppose with the larger banks, maybe performance isn't as bad. I might not necessarily reflect the weak macro per se, because also I suppose the point is that with the banking sector, the central bank is allowing forbearance for sectors or companies that might have been negatively hit by the pandemic. And so banks can restructure such loans, which might not necessarily result to lower loan loss provisions this year. I suppose in the future, if those companies don't recover, the banks would have to take provisions. But for now, you're able to kick the count down the road per se. So you might not necessarily see loan loss provisions tick up considerably, as one would think in a weak economy.
Okay, thanks. So we got some messages.
Yeah, we have some messages. Otunuga from Aja says, but from figures we're seeing, it appears that it's only Ghana that enjoys lower Eurobonds interest rates than Nigeria in major markets in Africa. Is that true? If so, it means that Nigeria is not as risky as we presume.
Okay.
And then Emma is here saying, it's not just that we have policies that are seemingly antithetical to FDI, it's that those bad policies aren't even consistent. The uncertainty and things like inflation and other market risks threaten to erode healthy profit margins. Forgive me for being pessimistic. At best, we'll experience marginal but insignificant growth. But the real bounce might come from Q1 of 2021.
Okay.
And then Henry Emmanuel says, what can the excellent Q2 results of financial companies like Citi, JP Morgan, and Wells Fargo tell us about what to expect from our tier 1 banks? Higher provision for expected losses.
Okay. Moving on the thank you all for your messages. On Eurobonds, I think where the Nigeria, Ghana, we're essentially all priced. I mean, when they look at us with regards to the interest rates that we get, isn't it within the same region?
Yeah, I think so. And then I suppose it's also a function of liquidity as well, right? Or how availability of the bonds and liquidity of the paper as well. And suppose the reality is that globally, I think I made that point earlier, that there's just considerable monetary easing. And so you have global central banks pushing so much funds into the market that you continue to see excess liquidity chasing yield. So you might say maybe because of the excess liquidity in the environment might not be a true reflection of the risk in those environments. So if you think about even listed companies as well in more developed markets, so S&P, you've seen some recovery, even though it's clear that the pandemic is going to impact companies negatively. You're seeing the Fed as well buying corporate paper, and across various jurisdictions, and so that as well, because of that excess liquidity, is distorting distorting how you measure risk per se, just because you have so much cash chasing limited assets.
Okay. I guess Henry Mann was also talking about the loan loss provisions rising. That's also a concern. And we did mention that. We're okay. Only got a couple minutes left. There's an article in the Guardian where they're saying economists are worrying about rising inflation, unemployment. Can you price inflation into equities?
I suppose you can, right? If you're able to raise prices. So if you think about companies that have been able to increase prices through this pandemic. So if you're of the agro-allied companies, were able to do that just because of the kind of scarcity the supply shocks created. So if you're able to do that, then inflation is good for you. But if you are one of the brewers, for example, that have been struggling to raise prices and you have competition cutting prices, then inflation is bad for you in the sense that your costs are rising, but you're not able to adjust for that in your margins. And so I suppose it's a function of how positioned you are, your position in the market. And so if you're a price setter, for example, then inflation is good for you. But if you're a price taker, then it's bad because you have less control of your price than of the output price.
Gotcha. I have so many more questions. We've run out of time. Muyiwa Oni, Regional Head, Equity Research, West Africa with Stanbic IBTC. Thank you so much for taking us through the markets, how you see things playing out, FX situation. Very, very insightful. And also, thank you all for your messages as well. Is today Thursday?
Today's Thursday.
Okay, so Tech Friday tomorrow. Talk technology. Muyiwa, thank you so much.
Thank you very much,
Thanks for having me, Rotos.
And thanks to all our listeners, and thanks to everyone who sent in comments this morning. We continue the conversation online, so please go on to our Twitter handle at Smooth981FM. Use the hashtag BusinessExpress981 to express any thoughts we were not able to take in the at this time. Next up, it's Freshly Pressed 901 at 7:30. Before then, enjoy some smooth music.
Trends beyond the headlines.
All right. Thank you so much.
Thank you.
From a Nigerian perspective,
Thank you, Muyiwa.
help you stay informed more than just numbers.
Rush on.